it and pay off?
There are two kinds of convertible. One, at maturity, let's say it's a US dollar denominated, you can be asked to pay it in euros. But most convertibles are, during the life of the bond holders have an option to convert them into shares. Let's say Apple issued a convertible bond, and the conversion rate is fixed at the time of the issue. $1,000 face value bond. Let me see where Apple is trading in terms of value or price. Let's say $1,000 face value bond could be converted into let's say it's 15 shares of Apple. Okay? As of now, 15 shares of Apple would be, well, let's not say 15. Let's say 5. Okay? 5 shares would be 170 times 5, about 875. Right now, it wouldn't make much sense to convert it. But if 2 years from now, Apple is trading at $300, 5 shares would be $1,500. So you're saying, okay, I can either hold this bond and get paid the interest rate, whatever the interest rate is, or I could say, take your bonds, give me 5 shares of Apple. And many tech firms actually use this quite a bit. This is much more common in Asian markets compared to US markets, but a lot of startups actually get bond financing this way. Startups or early IPO firms. In a lot of cases, when a firm is relatively new, there is quite a bit of a discount on its valuation. Take two firms that are otherwise identical. One is 2 years old in the market, the other is 50 years old. There's no hard and fast rule, but typically the 50-year-old firm commands about 20% higher valuation in the stock market. That means the older firms can issue equity and finance themselves cheaper. Well, if I'm seeing that as a startup firm, financing myself through share issuance is basically leaving money on the table. Here with the convertible, I'm saying the bondholders, if my stock price doesn't go up too much, I still have to pay you the interest rates. But if it does, I'm going to share some of the upside with you. So it's kind of a hybrid security. I think, for example, Tesla has a convertible bond. Let me see. Apparently back in, they issued a $600 million convertible bonds in 2013. It was worth $2 billion or $2 billion worth in 14, so on and so forth. Let's look at the Tesla stock price in the meantime. So let's do a max. In 2013, Tesla was trading, depending upon when it was issued, $9 to $12 range, and it's trading at $197 now. So if you were one of those convertible bond buyers, you can actually convert them to Tesla shares right now. Let me see. One thing about convertible bonds, they typically tend to have low coupons. A lot of them are actually zero coupon bonds. The idea is you expect to make money if the company ends up being successful. That means its stock price is going to go up quite a bit. Certain bonds are similar to convertible bonds, but with a kind of twist. You have a bond, but at the time you issue a bond, you also issue a warrant. A warrant is like an option. The difference between an option and a warrant, when you buy a call option, you buy it from somebody in the market. Let's say I bought a 250 call option on Tesla. And let's say I bought that from Elliott. That means anytime I want, until the expiration of that option, I can go to Elliott and say, here's your $250, give me 1 share of Tesla. And he's obligated to do so. A warrant is an option that's sold by the corporation itself. So if Tesla issues warrants for 1,000 shares of Tesla, when somebody exercises that warrant, Tesla issues 1,000 new shares and satisfies that obligation. That's the only difference. In the convertible bond, as soon as conversion happens, the bond no longer exists. All the debt is converted into equity. With the straight fixed rate with equity warrants, those are essentially detached. You're issuing 2 securities, but in a basket. You say, okay, here are 2 things, give me $1,000. But legally speaking, those 2 are detached. One of them is straight bond, and the other is an equity warrant. If the investors or the bondholders convert the warrants into shares, the bond still exists. That's the main difference between the 2. In the dual currency bond, the principal and interest payments are in 2 different currencies. You can issue a bond where principal is in US dollars, but you're making the interest in euros, for example. They're not that common. We talked about straight fixed. The biggest portion of straight fixed market is so-called Euro medium term notes. These are essentially Euro bonds with terms from 1 to 10 years. For some idiotic reason, we technically use the term bond for debt securities that are 10 years and that are longer than 10 years. A note is between 1 year to 7 years, 1 year to 10 years. A bill is less than 1 year. And we talked about those. In terms of distribution of international bonds, as you can see, almost half of the market is in US dollars. Of the remaining half, about 80% in euros, quite a bit in pounds, and not much in yen and other currencies. So dollar and euro is pretty much 90% of the market, and about 10% in pound sterling. in terms of who issues the bonds, let me see. It looks like UK and United States gets quite a bit of the market. For some reason, Netherlands is big. You guys know a reason why Netherlands is big in terms of issuer? Netherlands has some offshore dependencies. Some of the islands in the so-called Lower Antilles or the Lesser Antilles, places like Aruba, for example, and a lot of especially specialized bonds are issued on those tax havens or where the regulations are almost non-existent. Since Netherlands owns some of those countries,